Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 18th, 2024, and today's special because it's one out of 8 times of the year where the Fed meets and issues an official statement. It's the FOMC meeting today. And we typically see some serious market volatility on these days. Again, it only happens 8 times in the calendar year, and today just so happens to be that day. And so we are seeing some volatility in the market. On these days, one typically sees volatility in both directions. One direction, another direction, and then finally the market, it takes its course. It decides on where it wants to go. Where I differ from most analysts is that I don't think that whatever is issued in the FOMC meeting determines the direction of the market. The chart is already programmed, right? Before an ocean liner sets course, it's going to make some preparations. It's going to slowly veer on its course, on its track, right? It's not going to just pivot and go. In that same way, what we've been looking at in the Bitcoin chart is likely a distribution, a move that's been in the making for about 30 days, right? Up and against staunch resistance, not only on the small time frames, but also on large time frames, right? When we go to our weekly chart, we can see that $100,000 resistance is actually a 10-year resistance. I can show you that really quickly because I know there are a lot of new subscribers, so I'm going to show you that really quickly. Guys, welcome to new subscribers. Appreciate your subscription. And here we go. This is how 100K is a staunch resistance that's lasted about 10 years. What do you mean 10 years, Dean? We've never been this high. Well, let me show you. If you track Bitcoin's price action throughout its history, right, as we have on this chart, since about 2013, you can see that it's been matriculating in this channel, this blue channel, and it broke down from this blue channel in about 2022, okay? The $100,000 resistance represents the bottom support, the lost support of this 13-year channel. That's how it's 10 years of resistance, because, of course, when you're below a support, it's now resistance. Does that make sense? So you're right now at this point and experiencing 10 years worth of resistance. It's not just a random number, and people who think it's price discovery don't really understand what price discovery is. Price discovery is when you're free and clear of any and all resistance. You're not there yet because you're still experiencing on this chart that resistance, although you've never been this high. There's still a diagonal resistance. So a lot of amateur analysts will tell you we're in price discovery. No, just because the number go up, just because you're higher than you've ever been nominally, the chart price action shows something different. Price discovery is when you're free and clear of all resistances. That's the actual definition of price discovery. And when you get into price discovery, the quality of the price action changes notably, right? Palpably. You can see it. It starts pumping, moving, free and clear. This isn't that, okay? So that's how it's 10 years resistance, and that's why we're not surprised we're breaking down from here. We're experiencing some resistance, and it's unlikely that we're going to break it in one fell swoop. It's very much likely that we're going to do what we've been saying on this channel, which is revisit the high probability retest level of 65 to 70K, but We're not going to get there in one straight line. It's more likely than not that we go like this, all right? And I've explained because right here you're talking about a midline, which is support when you're above it, resistance when you're below it. We happen to be above it. So when we come down to this midline, which has lasted almost 2 years, we're going to experience a bounce, and that's going to be our first bounce. And also that bounce have us come back to the midline of this channel that we've been in for 30 days, retest that as resistance, then finally come back down to our level. So question is, now we go back on a small time frame, is that all but confirmed now that we've gotten the volatility in the FOMC market? And when you look at these, right, there's 8 calendar days of the year where you have these FOMC meetings. And again, I don't use it deterministically as if Jerome Powell says this, then that. No. FOMC to me is just a precipitating cause. It's just a trigger. It's just a catalyst. Whatever the market's been doing, it's likely to catalyze that into action. And so we've been distributing, we've been preparing for a dump, and I'm not surprised that today is the day we get our dump. Furthermore, on the small time frame, 15 minutes to be exact, what you see a bearish reversal pattern, head and shoulders pattern. Here's the neckline. I have that drawn in. Why do I have an alarm there? Well, because any breakdown must be confirmed by its retest. Just like I'm saying we have to come back down to here. Let me display this because I'm not going to assume everybody knows my work, everybody knows these charts. Just as I'm saying 70,000 is a likely retest because it's both the neckline of this descending broadening wedge that we broke out of in October. Okay, so breakout, retest, breakout. That's just how it works in technical analysis. Anybody who tells you otherwise is lying. That is a consistent theme in technical analysis. It doesn't matter what the pattern is. Breakout, retest, breakout, breakdown, retest, breakout. That's just how the market works. In Elliott wave theory, we say corrective patterns happen in flavors of 3. There's a reason we say flavors of 3, because the breakout's A, the retest is B, and then the breakout, the final breakout, is C. Flavors of 3. That's where you get the idea of a flat correction. Breakout, retest, breakout. A, B, C. I'm sure you've heard it. Not only is it dealing with this descending broadening wedge, this descending megaphone pattern, but you're also dealing with this massive multi-year inverse head and shoulders, which is a bearish or bullish reversal pattern, which is extremely bullish. So once you broke out of that in October, now a retest of this confirms. So coming back to 70K is not bearish. Coming back to 66K is not bearish. It's actually bullish. People don't understand that. It's bullish because it confirms this massive inverse head and shoulders, this massive bullish reversal pattern, which can only be confirmed upon retesting that area. So back to the small time frame. Is that all but confirmed that we're breaking down from this region of 100K? It will be all but confirmed if the following happens. Once again, we're dealing with our bearish reversal pattern right here on the small time frame that's been forming since about December 15th. This FOMC meeting catalyzed the breakdown of this pattern. Now that we've broken down, we need to, just as I said, break down, retest, break out. I'm waiting for the retest of the neckline, lost support as new resistance. This is a common theme. This is what you see. People who tell you otherwise don't know what they're talking about. It doesn't matter if you're an Elliottician, if you're a Wyckoff analysis, if you're a Gann trader. It doesn't matter if you're a pattern trader. This is basic technical analysis 101. You have a breakdown, a retest, and a breakout. Breakout, a retest, and then the real breakout. Always happens in that way. Now, the retest can look like many things. That's why we say flavors of 3, because you can have a composed retest or you can have a straight retest. A straight retest is just boom, boom. A composed retest looks like boom, 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 something like that, right? It can look, that B wave is mercurial. That B wave is all but anyone's guess as to what it's going to look like. But the idea is that you come back to the scene of the crime, you confirm it, and that's when you get in. That's when the real savvy trader gets into the short or the long at the retest. Okay, so that's what I'm looking at Bitcoin on the small time frame to confirm that. Whether that confirms or not, the overall thesis stands. What's the overall thesis? That we're in a distributive pattern, a bearish consolidation pattern, and we've been so for 30 days, even though we've been going up and to the right ever so slightly. This is bearish. This is really bearish. And what I said before is, look at this. That was the biggest wick to the downside in Bitcoin's history, I believe, in terms of the speed and how many cascade liquidations it had. And that was nothing. Expect to get the mirror of this. Again, 3 flavors of 3. A, B, C. It's going to now fill what we call this imbalance. This big wick has yet to be filled. So when we do, if we do retest this, if we do retest this level as resistance, expect this move down here to be relatively quick. That is likely. Okay, so that's what I'm seeing on the Bitcoin chart. Nothing much has changed. It's basically a confirmation of what we've been saying for the past month, which is likely that Bitcoin is at a local market top and it's likely to break down from here. And again, our first target is around 76K, and then the next target's between 65 and 70K. Now, let's look at what the US dollar currency index is doing, because when you talk about the Fed meeting, right, what does that do? Basically, all the Fed does is set policy. They affect the economy, right, by interest rates, right? That's all they can do. That's basically their whole deal. That's all they have in their bag of tricks. Whether interest rates go up or down is how they affect the economy, borrowing, credits, all that stuff. And that, affects buying and selling in the economy, trade deficits, trade surpluses, all that stuff, okay? So if the Fed has made it so that, at least temporarily, right, with whatever, because this FOMC thing is tricky, because there's what the Fed said and then the reaction to what people think they want to do. I don't try to figure it out. All I'm saying is this, very simply, that whatever happened affected the US dollar such that, at least temporarily in the immediate short term, the relative value of the US dollar rose. Remember, it doesn't matter what Michael Saylor does. It doesn't matter what BlackRock does. As much buying power as you think they have nothing against the liquidity of the actual US dollar. So if the actual US dollar goes up in relative value, the speculative assets that are purchased using the US dollar are going to go down. Doesn't matter what Michael Saylor does, doesn't matter what BlackRock does, as many billions of Bitcoin as they buy, they're just going to temporarily skew the charts, temporarily, right, create more consolidation before the eventual move. And that is exactly what you're seeing here. Dollar goes up, Bitcoin goes down. It's a rule. Short term, high time frame. So at least in the high time frame, or in the short time frame rather, this move that we said was likely to happen in the US dollar is happening. And as any impulsive move, expect it to go in 5 waves. So this is the first wave likely, and this retracement right here is where you're going to see a slight increase in Bitcoin and cryptocurrencies. Then it's going to boom up, Bitcoin's going to go down even more, and then it's going to finally finish. Once it gets up here, expect, at least temporarily, Bitcoin to stop dumping. All right, and that's what we said. That's what we've been saying. It's likely to go up, and when it goes up, Bitcoin's finally going to start going down. finally, last but not least, altcoins. A lot of people are interested in altcoins. What does the Bitcoin dominance chart tell us? Bitcoin dominance, remember, is a relative, it is what Bitcoin's doing vis-a-vis the rest of the cryptocurrency market. So if Bitcoin dominance is going up, that means crypto is dumping. Bitcoin is dumping, but altcoins are dumping even more. Bitcoin dominance going down, that means altcoins are gaining against Bitcoin. That's alt season, right? We said quite a while ago on this channel that when Bitcoin dominance gets back to this lost resistance, retest it, again, there's that principle, lost support, retests it as new resistance, that's when you should be interested in getting into altcoins, not before. We're not quite there yet. We're not quite there yet, okay? And furthermore, I'll say, once we get to this level, we're just not going to just go down in one fell swoop. I imagine we're going to consolidate, distribute. That should take some time. In that time, some altcoins will move, others won't. But generally speaking, it's more safe than not to get into some altcoins. Not all, some. Because some altcoins basically will start gaining against Bitcoin, and the only way they can do that is by either dumping less than Bitcoin or moving more than Bitcoin. So that's what you see in an altcoin season. So that's basically it, guys. I hope this was helpful. I hope this was useful. I hope you're staying safe in these very volatile markets. Like, share, and subscribe if you got value. Consider buying me a coffee by Venmo or by Cash App in the pinned comment below, or joining my crypto portfolio consultation service. This is a service that I'm offering one-on-one, up to 2 hours with me every month, $150. Well worth it if you don't know what you're doing to try and maximize your profits in this coming bull market. Balance your portfolio, choose the right assets, right, for what your goals are. So that is something that I'm offering. I haven't offered it ever before because this is the bull run coming up. I'm offering it for obvious reasons, and it's not something that I'm going to offer just throughout. I'm going to cap it because there's just so much time and energy I have to sit with each and every one of you for 1 to 2 hours every month. All right, that's it. Take care. Bye.